In today's very important lesson, I'm going to teach you guys how to read candlesticks, and that's exactly how I made $364 today just trading candlesticks. Candlesticks is very important because it's how I base my trades, it's how I enter trades and understand if we're going to reject here or continue on up. Because like I always say in my Discord, guys, and link is in the bio, candlesticks tell a story. They tell you whether we're going to consolidate here, reject here, or continue on up if bulls or bears want to take it. Because guys, like I said, candlesticks tell a story. Whether you trade futures, crypto, forex, it does not matter. Every single time you pop on a chart, there's always candlesticks forming. So let's get right into it. And it's going to be an in-depth video for all my people that are more dedicated and well-disciplined and want to learn and upgrade their trading skills. They're going to watch this video all the way through and even several times as well. So let's share a screen and show you guys why candlesticks is vital to trading. So this is what I mean when I say candlesticks tell you a story, because they tell you who is in control and who are they more in favor for, either bulls or bears. So you should take a screenshot of this and keep it in the back of your photos so that you can either back test or in the future pull this up what these candles represent. And the mindset that you need to have with candles is the fact that they are just buyers versus sellers. That's all the stock market really is, guys. It's just buyers versus sellers, and it helps you understand price action as well. They tell you who is in control, which is the most important thing you can understand. Now, the three topics we're going to cover in this video, guys, is the breakdown of candlesticks, which is these two bad boys. You got either a bullish or bearish candlestick. Reversal candlesticks, which are vital and important to understand to determine whether we're going to bounce at a specific level or continue on downwards towards the downtrend. Something like this. We got a bullish engulfing, which actually indicates a nice reversal candle to the upside. There's a lot more factors that you need to add in, but I do want you to understand is who is in control on this specific candle. Now, if you look to your right, you can see that they tell you that this is a really strong bullish candle. Buyers are in full control on this, and this bullish engulfing is a very strong candle, especially if it's at a support level, a Fibonacci retracement, or a trend level. Now, keep in mind, this is very vital, and this is the whole point of candlesticks, is who is in control. That's what you're looking for. You're looking for who is in control. Now, you can take a screenshot of these two pictures right here, the candlestick strength chart or the who is in control chart, and keep both of them in your back of your photos. So let's get right down into the business and talk about the breakdown of candlesticks. When you pop up your chart, guys, you're going to see these two type of candles, a bearish or bullish candle. Now, first, let's talk about the first candle on the left side, which is the bullish candle. Now, very simply, you're already going to understand that a green candle represents the price goes up. But if you don't, just understand that the green candle, the price goes up. Very simply. Bearish candle, the price goes down. Now, let's go more in depth in it and tell you guys what these wicks means, what the body means, and all that good stuff. But first, let's focus on the bullish buyer candle first. So first, you have something called the body. The body of the candle is the big square. You see, you have this big box right here, and that is the big square body. And also you have these wicks, these little small skinny things that we'll go over in a second. But first, we're going to talk about the body, guys. There are many different sizes to bodies. We do not judge around here. They come in all shapes and sizes. And I just added where you look at the body is represented on all of these type of different shapes and candles. On a bullish candle, the bottom of the body is where the price of the candle opens at. For an example, if this was $15 right here, then that just means the price around here opened at $15. And then we zoom on up, and the top of the body of the candle where it closes at is where the price ended up closing at. So for an example, if this was $15 here and it shot all the way up to $20, then that just means the candle went from 15 to 20, and that's where the price closed. Now that you understand where to spot the open and close on the buyer candles, let's focus on the bearish or seller candle. Same concept. When there's a body, it just equals the representation of the box. Difference is the price goes down. That's the difference. Unlike the bullish candle where the price goes up, the bearish candle, the price goes down because it's red. Therefore, the price of the candle opens at the very top. Unlike the green one where it opens at the bottom, the price of the open is at the top of the candle. Shoots on down. This is where the close is of the candle price. For an example, if this was $20, then that just means the price went on down theoretically to $15. That means the open of this candle was at 20 and it dropped down to $15. Just like the green candles, the bullish candles, the buyer candles, same thing with the seller candles, the bearish candles, they come in different shapes and sizes. And this time I labeled out where the open and close is on these specific candles. So you guys can see on the red candles, the open is at the top of the red candle. The close is at the bottom of the red candle. Even if there's wicks, which we'll go over in a second, you can still see that the opening price is at the top of the candle. Now, just to do a quick overview, bullish and bearish, the body is on the inside. Bullish goes up and opens at the bottom and closes at the very top. Well, the bearish opens at the top and closes at the bottom. Now let's talk about wicks, because wicks are vital and they tell you who is in control, whether there's a long or short wick. Now they're pretty much just the highest point that the price went up to and the lowest point that the price went up to. For an example, which we'll focus on the bullish candle first. The highest point that this candle went to was this general area. So let's say, for an example, this was $15 that the price opened at, closed at $20, but the highest that the price actually went to was $25. But the price or the candlestick didn't close at that general area. It actually closed below. So that's why you get this long wick to the upside, where at the bottom of the candle is the lowest that the price went to. Very simple. It is the lowest point the price has reached. Now I'll mark off real quick where there's wicks at on these specific candles, and you guys can see on number 1, there is no wicks at all. It is just a strong bullish candle. On number 2, there's a really long wick to the downside, and this is just the lowest that the price point hit. And on number 3, you guys can see that there's wicks on both ends, just like this general one right here. Number 4, there's a small body with a long wick to both sides. And on number 5, there's a big long wick to the upside. They tell you who is in control when you read these wicks and understand where price either sold off or got bought up at, which we'll go over more in a second. Now let's focus on the bearish or seller candle as well. Same concept. It is just the highest the price went to at one point and the lowest the price went to at one point. And here it is marked off on the side. You guys can see where the highest and the low points are on the bearish candles, and they're the same concept as the bullish one. They tell you who is in control, and when you compare these candles with the who is in control chart, you guys can see who is in control. And here's a quick screenshot if you guys would like to get an overview on what these candles represent. Body is in the inside of the box. The wicks are the highs and lows that the highest price and the lowest price went to. So let's dive into a live chart and let's talk about these first few 2 candles that are very simple and easy. And mind you, my candles are blue because I like the blue better than the green. Green and red doesn't look as satisfying, so I have blue and red. But when I hover over a candle, you can see at the very top left, it tells me all the information I need to know about these specific candles. It tells me the opening, closing, and the highest the price went to, as well as even the lowest the price went to. And you can see that this candle opened at 104.97 and pumped up a whole $2 to 106.62. Or you can look at the y-axis on the very right, where it hovers and shows the price range, and you can just hover below the bottom of the body that we just learned and see in this general area that it says 104.97 or 104.98. Just wherever you hover at is the general area that it opened at. This is the lowest that the price dipped to, but buyers stepped in and bought it all the way up as far as they could to 107.12 and sold it off just before the candle closed at 106.63. That is how you see and spot the open and close and the highest the price went to, just based off the wicks as well as the body. Now let's talk about real briefly, which is the most important part, and I hope nobody skips this part because this is very vital to trading. Before we even get to reversal candles, I want you guys to understand why it's so important to use wicks in your favor, how big and small the body is, because each candle tells a story, and I cannot emphasize that the most. I do feel like a lot of traders, especially new traders, and even some experienced traders that I noticed, don't even use candlesticks to their favor. It is how I spot my entries, whether I believe the candle is going to keep on continuing on up or down. Now on my technical analysis chart, you can see that I actually have a few levels already marked off, but we're not going to use that because I'm so confident in candles, you can practically almost use them just by themselves, although I do not recommend that because you have to find the best setup in your favor as a trader. As you can see at the very bottom of my chart, I have volume, which differentiates how much buyers versus sellers were in each specific candle, but we're not going to use that as well. We're just going to talk about the wicks and the bodies in this case before we even get on to reversal candles, because this candle right here is a reversal candle as well as this one. Same thing with this one, but we're not going to get it too ahead of ourselves. You guys are going to learn that in just a few minutes. But before we even get into that, I want you guys to understand how each candle literally tells a story. So you have these 2 massive buyer candles, which if you pull up the who is in control chart, you'll see that these type of candles are massive buyers to control. Now you can see the opening price of this red seller candle didn't even sell off comparable to how big this massive buyer candle is. It's really small. Then on the next candle, we have an indecision type candle. Reason being why I say that, even though it's in more of a buyer's control, is because look how small the body is. Long wick to the downside, but even a little bit of a longer wick to the upside. But on the very next candle, long wick to the downside, and this candle right here is called a hammer, but we're not going to get into that just yet. You'll understand what that means in a second. But the reason why this one's very strong, if you pull up your cheat sheet, your who's in control chart, is because it says this. The price opened at 108.06. Sellers tried their absolute best to sell it off to 107.66, but buyers stepped in and took control over this and closed it above the opening price. Same thing with this candle. Buyers opened at 108.36. At one point, this candle was red and tried to sell off to 108.13, but buyers stepped in once again and took control. Now this candle is very important and vital to understand as well as this one. But first, let's go over this one. Look at how small this body is. It opened at 108.88 and closed at 108.90. Just 2 cents difference of the share price when it opened. Look how small that body is. What did buyers try to do? Buyers tried their absolute best to take it as high as they could to 109.57, but sellers stepped in and dropped it all the way down to almost as close as they could get to the opening price. Just 2 cents difference. That's already an indication that sellers are trying to step in just based off the wick alone. And the wick again is just this long, very skinny, and it shows you where the price tried their absolute best to get to the highest point that it went to, but sellers took control on this candle. Especially this candle right here, guys. This is vital. I hope you guys are paying attention to this because at one point this candle was green. It opened at 108.89. Buyers tried their absolute best to buy it again one more time, but sellers took immediate control and sold it off. Even got down to 108.60. But a little bit of buyers stepped in and it closed below the opening price. Now these two candles look very similar, but sellers took more control on this candle. Then you get a decently big seller candle here, but look at the wicks, guys. Where is the wicks located? And look how long this one is specifically. You can see that there's a little bit of a wick on this red candle, but even a bigger wick on this next buyer candle, indicating that buyers take control once again, and they're trying their absolute best to take control of this stock. Massive amounts of buyers here, no selling wick to the downside whatsoever, straight massive buyers. Little bit of a wick to the upside, not so much significant. Look at this candle right here. Sellers took back control. Buyers tried to buy it up one more time, but sellers stepped in and took control. There is no candle close above this recent high at all. It closed below, indicating that most likely sellers are going to sell it on down. Now, if this candle closed above these most recent highs, most likely what would have happened is the price would have continued on up even higher. But in this case, sellers took control and sold it off, and even again, sold it off one more time. But pay attention, guys, to where the wicks are located. Long wick to the downside, and another long wick to the downside. But look at this small body. It's not that big. It's very small, almost no wick to the upside, almost no buying as much as pressure as they did on the other ones. It's very small. And very soon you're about to learn what these candles represent, but this is a bearish engulfing. It completely engulfs the most recent buyer candle. And we're gonna get over that in a second. And we'll go back to the live chart and show you guys exactly what it means and how you can spot these reversals to the downside for even more downside reaction. But overall, sellers took control. And again, look at where the wicks are located. A little bit of wicks to the downside, even longer wicks to the downside. Buyers are trying to step in. Big wick to the upside on this candle, but ultimately sellers took control one more time. And again, big sell-off candle, small buyer, and overall seller step in. Selled all the way down to where you're about to learn what this candle represents here very shortly as well, followed by another bullish engulfing, completely engulfs the most recent seller candle, which we'll learn very shortly. But guys, pay attention again where the wicks are at. And I know I sound like I'm just rambling on, but this is very vital, important information to how you can spot reversals back to the downside and understand where the price action is moving next. Both of these candles have long wicks to the upside, indicating that sellers are stepping in. Especially this body completely engulfs the most recent buyer candle, which indicates another reversal back to the downside. And I can go on and on, but we're going to go back to the charts here soon to show you guys exactly what I'm talking about. But this is another bullish engulfing, which is a bullish signal for the upside. And overall, buyers take it, long wicks to the downside, and they take control. Until again, we get long wicks to the upside, indicating that sellers are stepping in one more time, followed by another bearish engulfing, which is a reversal candle to the downside. And these are my favorite types of candles to catch right here, because this just indicates that buyers tried their absolute best to buy it one more time, but sellers stepped in, and again, sellers stepped in one more time, and back on down the trend goes. Now, sometimes you'll get candles like these where you're very confident that buyers are going to take it on up, small seller, but overall sellers continue on the selling pressure. Then next thing you know, big massive buyers step in like crazy. And again, guys, you guys are going to learn about this candle. It's called a bearish engulfing. And this is going to be the last bit that I talk about before we move on, because I can go on and on and on how to read candles because they're very vital to trading. But this is a bearish engulfing, which indicates a reversal back to the downside. And then you get a bullish engulfing with a long way to the downside, indicating another reversal to the upside. And again, guys, pay attention to the wicks. And overall, you guys understand the story now. Long wicks to the downside indicate that buyers are stepping in. Another bearish engulfing back to the downside. And again, long wicks to the downside indicating that buyers are stepping in. And I can go on and on and on. That's how very simple and easy it is to read candlesticks in your favor. And usually the higher the time frame, the stronger the setup. Now we were watching that on the 5 minutes, but if I were to switch over to the 30 minutes, which usually means the higher the time frame, the stronger the move, you guys can see already lots of big buyers in the beginning of the morning, decent seller candle to the downside, big buyers step in, and then look at the wicks. Where are the wicks located? On these specific 3 30-minute candles, which take an hour and 30 minutes, you guys can see the selling pressure is pretty strong. Sellers stepped in and we get a massive sell-off. You can read that on any time frame, guys. Big bearish engulfing to the downside, long wick to the upside, indicating that sellers are stepping in. And then pay attention on these candles where the wicks are. They're to the downside, indicating that buyers are trying to step in. There are a few wicks to the upside as well, but most importantly, the majority of them are on the downside, indicating that buyers are trying to step in, and they did. So now let's get into reversal candles so you guys can understand even more, and then we'll get back to the chart and show you guys reversal candles. And now let's talk about reversal candles, which is probably my favorite part of this because they understand and teach you how to spot reversals in the trend, especially if we had a support level. And also we'll even go over on the chart and show you guys these candlesticks and show you guys where I made my money at today just using these candlesticks to understand the rejections and reversals. First, let's talk about the bullish engulfing, which is probably one of my favorites, and I spotted it today at the bottom of a support level, which we'll go over here shortly. Now, hence the word reversal candlesticks. When you're trending down and you see a big buyer candle, that is a bullish engulfing. This is a bullish engulfing. And the reason why it's called a bullish engulfing is because the body completely engulfs the most recent seller candle. Buyers are completely taking over and buying not only the lowest part of this recent seller, but they're also taking it above. And that is how you spot your reversals and continue on up to the upside. As you guys can see on the 15-minute chart, you guys can see one right here that looks exactly like this diagram. We're downtrending, and then you get a reversal here of a bullish engulfing candlestick. Now, they are a lot more stronger when they're at a support level, at a Fibonacci retracement, or at a zone, at pre-market low, or just in general at a support level where it actually has more reasons to bounce than just one. Because this is just one reason out of many that you need to spot if you want to spot a reversal. Now let's talk about the bearish engulfing. It's basically just flipped or the opposite. Bearish engulfing indicates a reversal back to the downside because after you're already uptrending, you get this massive seller candle that completely engulfs the most recent buying candle completely. And that's how you get your continue on down to trend. And that's bullish and bearish engulfings, guys. And let's look at a bearish engulfing as well as a bullish engulfing in one single time. As you guys can see, the price was trending on up, and then you get a bearish engulfing back down to the downside. And then you get a bullish engulfing here, back onto the upside. Now, the reason why some of you guys may be questioning yourselves, why isn't this one considered a bearish engulfing? Because look at the open and close on this candle. It did not completely engulf the most recent buyer candle at all. Now let's talk about another reversal candlestick that's probably also one of my favorites as well. Hammer stick candlesticks. Remember, who is in control? That is what you want to understand in these videos. When we're downtrending very hard, the way to spot a reversal is look at the wicks. Now this candle right here represents a hammer. Reason being is because at one point the price opened here, tried to continue on selling off. This is the lowest the price to point ever hit, and then it completely rips on up past the opening candle and closes with a nice bullish green hammer candle, indicating that buyers want to buy this candlestick up. And you guys can see we get a nice uptrend back to the upside. And here you guys can see a couple different hammer candlesticks on a shorter time frame called like the 5 minutes. Reason being, like I said, guys, is because the price opens here, sellers try to sell it on down below, but then buyers stepped in really hard and continued the trend on up. And again, sellers try to sell it off down here to the lowest point. Buyers stepped in and bought it on up again. Now, another bullish reversal candle is also called an inverted hammer. Now, this one's probably not my most favorite. And in fact, whenever I see something like this, I actually believe sellers are more in control. But the reason why this one still exists is because the body is not that big. And at one point, buyers did try to buy it. Buyers did try to step in and take it on up. But sellers ultimately did close it below the opening candle price. But still, this is a reversal candlestick as well. It's called the inverted hammer. And as you guys can see here on an actual 5-minute Apple chart, it reversed on up. Now, what you need to do is actually watch the candlesticks before and how they were forming. You guys can see that this candle, if you pop up the who's in control chart, you guys can see that this candle before the inverse hammer or the inverted hammer, there's a lot of wicks to the downside and upside, and this is called the indecision candlestick. So just before we actually get that inverted hammer, there's an indecision already in the market. Then you get this inverted hammer, which is a reversal candle back to the upside. And here's just a couple charts on the hammer as well as the inverted hammer. But let's continue on. Now let's talk about bearish candlesticks. There is something called the shooting star candle, which is very vital to trading and important to watch for. When you get a nice resistance level that it's approaching and you get one of these candlesticks, most likely the price is going to reverse back to the downside. The reason why I say that is because when you get a lot of buyer action and then the price opens here, buyers try to buy it in and sellers sell it off pretty hard. This is just indicating that sellers want to step in, especially if you have a zone up here, a Fibonacci retracement or a resistance level, or just an area where sellers like to step in a lot. As you guys can see on this candlestick right here, or on this candlestick chart, On the 15-minute time frame on SPY, we have a shooting star candle back to the downside. Now let's quickly read these candlesticks to show you guys what I mean by this. Lots of buyers step in, small sell-off candle. They try to sell off again, but buyers step in pretty hard as well. But then look at this candlestick, guys. Buyers try to take it on up one more time, but sellers stepped in actually and took it on down. Now another bearish reversal candle is called the hanging man. It's basically just a shooting star candle but reversed. And this one also, just like the other one, is not my favorite to look for, although these do hit and there are a lot of them spotted. Because you guys can see buyers try to take it on up, but sellers sold it off. And the next candle, again, just like the last time, is an indecision candle. A lot of long wicks to the upside and downside, as well as on the next candlestick, there's a long wick to the upside indicating that buyers try to take it on up, but sellers stepped in. So reading candlesticks is vital and helps you understand where the reversal or where the price action in general is going in your favor. We are very briefly just going to go over one quick thing or a few quick things. And guys, it's very important that you guys understand these type of concepts as far as when it comes to reading candlesticks. So let's talk about this general area first. Now, the first thing that I do is I don't take my trades literally the first 5 minutes just because I see one green candle. I actually wait 15 minutes for the market to breathe and let it do its own thing, because I'm assuming that people are getting in their positions from yesterday and the day before and repositioning themselves today after they notice the market has already made a move. So the first 5 minutes we get somewhat of a bullish candle, breaks above all these most recent candles. So that's pretty strong buyers. But look who takes over on the next candle. And what did we just learn? This is a bearish engulfing candle. Completely rips through and takes control of the market for a quick second until we get somewhat of a long wick to the downside. And at one point, this candle was red. Just know that. But buyers stepped in and bought it up as much as they could. And the sellers stepped in just a little bit to sell it off a tad bit. But then guys, what is this candle telling you? This candle is telling you that it's in seller's control, because buyers tried again to buy it up. They couldn't get above opening price candle or even above this big bearish engulfing. It took it just a little bit of buyers to step in. Sellers took control and they took control of this candle here. Then on this candle, it breaks even and creates a lower low, which you'll learn in another video of my educational course. But overall, we break this recent low with a strong seller candle to the downside, make some new lows. And look at this candle, guys, a wick to the upside, indicating that sellers are stepping in. And again, we just continue on the downtrend. Now let's look at today's trading day, which is a Tuesday. And I took SPY puts off of this very simple pattern here. And it's what we just learned, because early in the morning, buyers try to take it in, but sellers took control and sold off this candle. What did we just learn? This is called a bearish continuation pattern. And I don't take trades just based off the first 5 minutes. I wait patiently to see what the market's doing, and you guys can already see small buyer indecision type candle if you pull up the who's in control chart, a decent buyer candle here, but ultimately sellers step in again and take on control and even close almost as low as this candle here. And that's why I just risk it for the biscuit and enter some puts for a quick gain. Long wick to the downside. Somewhat of an inverse hammer of what we just learned. Buyers take control. Look at the wicks. Where are the wicks at? Where are they located? And you guys can see the wicks are located up here as well on this general area, which is why we sold off. Wicks to the downside indicated that buyers are trying to step in. Another long wick to the downside. And guys, what did we just learn? We just learned that this is called a bearish engulfing candle. Sellers completely take control of this candle. No buyers whatsoever at all in the volume, but we're not going to use volume in our favor here. I just want you guys to understand that this is called a bearish engulfing. Sellers completely took over this candle. Look at these wicks to the downside. This is where I entered puts again. And the reason why I entered puts is because if I pull up my actual technical analysis chart, you guys can see that we became in the zone, and recently we were trying to hold above that zone. Now that we're in the zone and creating all these long wicks to the upside, it gave me confidence that we're going to drop even lower. So I entered some more puts, and that is how I printed even more money. And overall, I just want you guys to understand what these candles represent, why the wicks to either direction is very important to understand, how big the body is, how big the wick is. Because if you add other things like your support and resistance levels, read volume, maybe add some EMAs, after you learn what all those represent as well, your trading will become a lot better. So let's talk about this quick moment. Big sell-off candle, and we just completely downtrend, completely. For a long time, for over an hour. Then around 8 a.m., you get somewhat of a bullish engulfing here. Very small body. I would not trust that. I would not take calls here at all. But then you can see very long wick to the downside as well. Big buyer candle. Volume is more stronger than any volume comparable. But overall, next candle, another long wick to the downside. Somewhat of a long wick to the upside with a decent buyer body. Super big body here. Very important. Small doji type candle, which we're about to learn in a second. Somewhat of another seller candle. But guys, pay attention. It did not close below or even engulf or do anything comparable to this most recent recent buyer candle. Then buyers step in just a little bit here. Would it be too confident that they're really going to do much? The only good thing is that on this candle right here, we close above the most recent closes on any of these candles here. So the close is very important as well, and something that I did not go over, but I hope you watched all the way through to this part as well to understand that when you get a candle close above the most recent closes, that's an indication for a little bit of a bullish sign. Wouldn't just go off that right away, but understand right after that, you get a nice strong buyer candle. A little bit of a long wick to the upside, quick bearish engulfing sell off to the downside. But guys, look at how strong this hammer candle is. This is probably my most important and vital candlestick you can watch for because it indicates that buyers really want it. Now, it's very hard to catch this candle in action because you don't know if it's going to end up selling off again. But that's why you wait for the next candle to dip as low as it can. And you can see it actually dipped below the open of this candle. And that's where hopefully you enter. But overall, buyers take control of that bad boy. And you get somewhat of a seller candle to the top side, indicating that sellers are trying to step in. But then look what happens. Bullish engulfing, long way to the downside, not too long, but decent enough. Overall, the wicks to the downside are indicating that we do want to take it on up, and we just get a continuation of some upside trend. Again, another long wick to the downside, indicating that buyers are trying to step in, and they do end up taking it up. Another long wick to the downside. So these are the things that help you understand if the trend is going to continue on, just based off the long wicks to the downside. If we're uptrending, in this market, it was trying to continue on the uptrend, and you can see that the candles are telling you that. Now, this will be the last chart that I go over, but you guys can see big buyer candle early in the morning, indecision candle here, decent sell off, another indecision candle, back to the upside we go with some nice wicks to the downside, indicating that buyers are trying to step in. But then look what happens here. Bearish engulfing completely takes over, sellers step in, even breaks below on this candle right here, closes below the candle open, more bearish action until we get another bullish engulfing. So this was a bearish engulfing, here's a bullish engulfing, indecision type candle that you guys are about to learn in a second. Sellers take control again, and here is my favorite pattern. A bearish continuation. Now, it did not continue on. As you can see, this type of doji type candle stepped in, long way to the downside, and buyers completely took control and started creating some new higher highs. Until you guys can see, long wicks to the upside, indicating that sellers are trying to step in. Somewhat of a doji type seller type candle, but ultimately you get your bearish engulfing here, and that's where the trend reverses back to the downside. Very textbook pattern here. Very simply and easily to read. And this is why candlesticks are so important, guys. Bearish engulfing here. This candle absolutely tried its best to climb back up, but ultimately sellers step in and even closed below the most recent buyer candle and took control. So that is very simply how you guys read candlesticks, as well as understand these type of reversal candles where the long wicks are to the upside and to the downside. But now let's get into doji type candles, which are just these kind of candles right here. Now let's talk about doji candles, which is probably the last we'll go over. And these are really just indecision candles where the market doesn't really know where to take it on. And you can Google these as well. There's many of them. But as you guys can see, doji candles are just indecisive candles where they don't know, where the market doesn't know where to take it to. Buyers or sellers aren't really doing much with it. Small bodies with long wicks to both sides. This one as well. You'll see a lot of these as well. And you guys can see this is a Google image right here of different type of dojis. We got the classic one, which is just a very small one. They call it a lot of weird names like log leg, dragonfly, gravestone. But the names you don't really need to necessarily remember. Just understand what they represent. Read the wicks, read the candlesticks, because a lot of time when you see a gravestone doji, it's most likely for sellers stepping in a lot stronger to the downside. When you see a dragonfly, look at that long wick to the downside, indicating that actually buyers are stepping in. So it just depends on where you're at in the chart. If there's a resistance level above the gravestone doji and you get one of these candles, it's most likely going to reverse back to the downside. Whereas if there's a dragonfly trying to hold support, most likely you're going to continue on up to the upside. Doji candles are really just neutral. And like I said earlier, they're pretty indecision type candles. But you guys can see right here, this is where the market reverses because it's also a reversal candle. When there's a lot of buying pressure to the upside and you get one of these candles at the very top, it kind of indicates that we want to reverse here. Look at the long wick to the upside. And even before that candle, there's also a long wick to the upside. And long wicks to the upside have just been creating for the past 15 minutes, indicating every time that sellers do want to step in. And just like I mentioned earlier, look at this dragonfly doji. It's more in the favor of buyers because look at where the wick is, as well as where the body is. It closed green, long wick to the downside, indicating that buyers want to step in. Even the next candle almost looks a little bit similar to it. You can almost call it a hammer as well. But look at the wicks. The wicks is so important because the wick is indicating that buyers want to step in. And if you just read these candlesticks or pause this moment and look at each candlestick and look at where the wicks are, you can kind of see where the trend is going. Every time there's a long wick to the downside, indicating that buyers are stepping in, we end up pushing up to the upside. When sellers try to step in here after this long, big buyer candle, you can see again, buyers just took it on up again. But then look what happens here. There's a classic doji. a regular doji candle where buyers just hit a wall. They just stopped. The candle next over is a seller candle. Long wick to the upside, bigger body, and this is an indication for a reversal. So these are your different type of doji candles, and you can either take a screenshot of this or just Google them yourself, or just understand that dojis typically are just neutral candles, indecision type candles, small bodies, long wicks to either direction. But pay attention specifically where the wicks are priced in at. And we're almost done with this, but we're gonna go over continuation patterns, which is probably one of my favorites, because this is what I look for if I'm still in a trade or looking to get into a trade or deciding if I should even enter or not. This one is called the bullish continuation, and it's by far my favorite because you see it actually quite often on either the 1 minute time frame, 3 minute time frame, or even the 5 minute time frame. All it represents is that beforehand, buyers bought it on up, and then sellers try to sell it off a little bit, but you guys can see the wicks to the downside are indicating that buyers want to step in. Now, the most important thing to understand with bullish continuation patterns is the fact that sellers never sell it below the most recent big bullish candle. There's small sell-off candles inside the most recent bullish candle back onto the upside. And you guys can see there's many different types of them. Look at this bullish continuation candle right here. Big buyer, small seller doji type candle, another seller candle, but then a big buyer again, which basically is a bullish engulfing here. Then if you look at the next candle, long wick to the downside, indicating that buyers stepped in, and that's just a continuation candlestick pattern. It just indicates that buyers do want to take it on up and continue the trend to the upside. Then you get a few hammers here, bullish engulfing off of that hammer, and guys, look at this again. Look at where the wicks are located at. They're located to the downside, indicating that buyers want to step in. Same thing here in the same general area. Another hammer, even before that another hammer, but another bullish engulfing as well with long wicks to the downside, indicating that sellers are stepping in. Now this is another, basically, I didn't even catch this, but look at this one. It's the opposite of a bullish continuation, but it's a bearish continuation to the downside. But we're about to go over that as well. But that is a nice price action read on these candlesticks, and this is how you read candlesticks in your favor, because you can look at each candlestick and understand where most likely the next candle will end up forming. You may have a doji at the top for the reversal, and overall, guys, that's how you understand and read candlesticks. Now for the bearish continuation, just like that most recent photo I just showed you, it's basically the opposite of a bullish continuation candle, except it's for the sellers. Reason being is because we try to sell off really hard. Buyers do their best to try to step in, but ultimately sellers continue on down to the downside. And there's a lot of these on this specific chart right here. On the 5 minute time frame, you can see them a lot. Look at the first example. Look at the wick to the upside. Buyers did try to step in, but sellers sold it off pretty hard. Then you get a bullish candle right here. Then look at this. We just talked about doji candles. Look at the wick to the upside, continues on down, and creates another bearish continuation pattern. Now that is your bullish and bearish continuation patterns. And here is a couple cheat sheets that you can screenshot for to understand more different candlestick patterns that I did not go over, because there's so many of them that this video would be a lot longer if I ended up doing all of them. And here is also another cheat sheet that you can screenshot as well. But over time, the more you're in the market, the more you're actually watching the live markets or even back testing, you'll be able to understand candlesticks and use these screenshots in your favor. And over time, you can delete these once you get the hang of it and understand how to read candlesticks. Because most importantly with candlesticks, it's really just the wicks. Where are the wicks located at on the candle? That is what indicates the reversal or continuation to the upside or downside. They tell you who is in control. And now each candlestick, like I said, always tells a story. Each candlestick tells a story. The next video will be on candlestick patterns, and I will not add that in this video because it would be too long, but the next video will be on candlestick patterns. So if you would like to watch that one, then wait for the next video to drop, but it most likely will be from our premium members. Now this video was just a startup to understand candlesticks, but the next video will be more in depth and how to understand and read candlestick pattern charts in your favor. Thanks for watching, and I appreciate you guys being here. And if you guys would like to join in the Discord and have access to all of the videos, then click the link in the bio. This is how I was able to take a trade to the downside and catch the most biggest gain on SPY, just understanding candlesticks, reversal candlesticks, and using price action in my favor. So as you guys can see, I have a couple of levels already marked off, but let's delete pre-market low, which is PML. And let's just keep the high of yesterday, that's what you see right here. HOY is the high of yesterday. So my favorite type of trading strategy is to break and retest. So as you guys can see, in the first 30 minutes, I didn't really care to take any type of trades because there's really nothing going on, but you get a strong break to the downside below the zone. Then you get a retest here, which is my favorite strategy. I could have entered here, but I decided not to because look at all this choppiness. Look at the way these candlesticks are reading. The price action isn't really in my favor as much, although you could enter short here, but I did not yet. I waited for price to do whatever it wanted to do. You guys can see the long wicks to the downside, indicating that buyers are trying to step in. A little bit of a higher low here situation, but then ultimately we come to retest this zone at the very top, but not even that. We come to retest the high of yesterday. But let's talk about why I entered, where I entered, and how did I even understand where to enter at. Because the entry that I got was just reading candlesticks, guys. Candlesticks is vital, and they teach you how to enter and where is the best entry you can get in. Because we come to retest this specific level of 547.71, which is the high of yesterday, after we get this big break to the downside. But look at these two candles, and I'm gonna mark them off for you guys. This candle is what we just talked about, a shooting star type candle, inverse hammer, whatever you want to call it. Really look at the wicks to the upside. That's really what I want you to pay attention to. The wick is to the upside, indicating a rejection, indicating that seller stepped in and sold off. Not only that, but it's still below a specific resistance level, which at one point was being held, but broke below. And this is my favorite strategy, a break and retest. So I waited for this candle to do whatever it was gonna do, showed me that sellers are stepping in, and then I see it one more time. Buyers try to step in, but sellers ultimately took control, sold it off really hard, and back down we go. So I told myself, I'm gonna enter on the next retest. So as soon as we get a strong break of this 5 minute down to the downside, indicating that sellers are super in control, and they most definitely are in control, I decided to take an entry as close as I can to this zone. So I entered at the very top of this candle, and as soon as I watched this 5 minute candle close, you guys can see that a long wick is to the upside, indicating that sellers are still stepping in, and it's more my favorite to the downside. So I ended up holding for another 5 minutes, and that's where we get a big sell-off down to the downside. And that was how I was able to make 364 off a single trade, just reading candlesticks and a couple other things like the break and retest strategy, as well as understanding how to use my support and resistance levels, because you guys can see I have this big old zone here, which is a daily zone when I look at the settings of it. So it's very important to add everything in your favor to spot the best trade you can find in your favor. And I just wanted to show you guys that to understand and how to read candlesticks, as well as soon as we sold off, came to this bottom of the support, long wick to the downside at the Fibonacci retracement of 61.8%. And anybody that watched my Fibonacci retracement video understands that 61.8% fib is a very strong reversal level. And as you guys can see, a bullish engulfing with a decent amount of buyer volume kicks in, and that's the reversal there. Then we just started to reverse back to the upside, and we never came back down. So that is how you read candlesticks and use them in your favor.